Good morning. Hey, there's another reason to seriously consider diversifying your retirement portfolio away from Wall Street, and that is that DC is on the attack against Wall Street. My name is Brian Ellis with the Self-Directed Investor Society, and today I've got some important information to share with you. And yes, I do have my thumb wrapped in gauze and children's band-aids. Smashed my thumb yesterday, kind of stupid. But that explains why there's animated characters on my thumb. Hey, look, as we go through this, I encourage your comments. If you agree, if you disagree, if you have anything to add, please have at it. Now, yesterday there was a big announcement that came out of Wall Street. Democrat Senators Chuck Schumer and Bernie Sanders announced a new legislation package that will regulate buybacks, corporate share buybacks. This is going to be a very bad thing for the market if it was to actually pass. As you'll see, a great reason to diversify away from Wall Street and into other real estate classes is that Wall Street represents the biggest political risk of all asset classes that exist. Whenever you think of investing, whenever DC, whenever the people in Washington think of investing, what they think of is Wall Street. That's the one they're going to target, and that's the one they're targeting now. A great reason to diversify away from that one. And a great way to do that, a great tool to use to do that, is a self-directed IRA. And you can learn more about self-directed IRAs. These are the tools that allow you to invest your retirement portfolio in things other than stocks, things like real estate or precious metals or intellectual property or just about anything you can imagine. If you'd like a free copy of the definitive guide to self-directed IRAs, just text IRA guide to 833-212-2112. Now, right now, corporations are allowed to use their profits to do, really there are about three things that they do with excess profits. One of them is that sometimes they buy back shares of their own stock. That means they have confidence in the future of their company, so they buy back shares of their own stock, and usually that means the remaining shares of stock on the market are worth more from that point on. Another thing they can do is pay out dividends, and then another thing they can do is do capital investments, such as buy new equipment and upgrade their existing equipment, et cetera, et cetera. All three of these things are done a lot, but the legislation proposed by Chuck Schumer and Bernie Sanders basically puts a big roadblock in front of any company who wants to do that. They're going to demand that any company who wants to do that first be paying all of their employees $15 an hour regardless. Think about McDonald's. That would mean McDonald's was paying all the folks behind the counter and flipping burgers $15 an hour to do that. They would have to do that before McDonald's could buy back any of their own stock. They're also going to be forced to offer lots of paid time off and a very specific and rather expensive benefits package. In other words, the government is saying before you can do with your money what you think is best, you've got to do with your money what we think is best. Not a good situation. Here's a quote from that Schumer and Sanders offered yesterday. They said, "At a time of huge income and wealth inequality," there's a red flag for you. Anytime you hear the word inequality, that means there's a politician at work. They go on to say, "Americans should be outraged that these profitable corporations are laying off workers while spending billions of dollars to boost their stock's value to further enrich the wealthy few," the senator said. Now, look, my friends, if you invest in stocks, if you have a stock portfolio at all, you are the wealthy few that he's talking about. He's not talking about billionaires. He's talking about people who own shares of stock. That's who this will affect. That means you. That's why there's such severe political risk in stocks right now. So what does it really mean to you practically? Well, look, buybacks, again, are when a corporation has excess capital, excess profits, and they buy back shares of their own stock. It makes sense. Sometimes one of the most common times that stocks are bought back by a company is whenever the stock market is falling precipitously. Maybe there's a crash, maybe there's just a really bad time going on, and a company that has available capital might say, look, our stock was $100 last week. Today it's $70. Maybe we should buy back a whole bunch of it right now. That'll make the remaining shares out there more valuable. That makes a lot of sense. So a stock buyback is whenever a company buys back its own stock using profits it's already earned. And again, it's frequently used, by the way, whenever the market is crashing and in a bad situation. And in so doing, in using it that way, corporations are frequently the last line of defense against their own stock falling apart in a market crash. They provide a support, a floor for the value of that stock, because whenever a stock drops and a corporation goes ahead and spends a lot of money to buy back those shares of stock, that is a supreme vote of confidence, because nobody knows more about that company than that company. And whenever they buy back their own stock, that's a wonderful support, a wonderful backstop against horrible market declines. Schumer and Sanders and the Democrats want to take that away from you. This means that stock market declines and crashes will be more volatile than they've been before, more severe than they've been before. There won't be a backstop. This legislation would take that away. So how big is this issue of stock buybacks? Well, CNBC tells us that from 2008 to 17, 53% of corporate profits were used to do stock buybacks, and this essentially boosts the value of the remaining shares, which is a good thing for you as the owner of those stocks. That's what you want. 30% of profits were used to distribute dividends, and the remainder, about 17%, were used for capital improvements and other issues. So 53% of corporate profits through 2017 from 2008 were used for this purpose. So it's massive, but it got even bigger last year in 2018. There were over $1 trillion worth of buybacks, which is double what it was in 2017. This is a big thing, and it's getting bigger. And the politicians in Washington want to take it away from the people on Wall Street, which means your stock portfolio is going to suffer. This will have a quenching effect on stocks, absolutely, and it will prolong severe market declines. That's the reality. And look, CNBC. Which is who I've cited so far. Their coverage of this was really, really interesting, because they tend to be very much politically aligned with people like Schumer and Bernie Sanders. But even all four of the analysts that CNBC interviewed about this in the video they're showing today, all four of those analysts poo-pooed this and basically gave it a thumbs down, saying it's ridiculous. And it really is. It's a clear example of politics over people, politics over the economy, politics over your life, your retirement. This makes no economic sense. It's stupid. It's awful. And look, people like you who invest their money in shares of stock, you deserve the benefit of the profits of that company working for you. Yes, you own that stock, but that doesn't mean you should be demonized as the wealthy few. And that's exactly what's going on here, my friends. They're not talking about billionaires or even just millionaires. They're talking about people who own stock. That's you. That is political risk. You deserve the reward, but DC doesn't want you to have it. They just don't want you to have it. This, again, is why it's so important to diversify at least partly away from Wall Street and into non-politically sensitive asset classes. And you know what? Right now, that's anything other than stocks. Wall Street is clearly in DC's targets. That, again, is why you need to understand what self-directed IRAs can do for you. If you've got an IRA or 401k that's invested in stocks, you can move some of that money over and invest it in things other than stocks, things like real estate, precious metals, intellectual property, private loans, et cetera, et cetera. And it's very easy to do. Just text the word IRA guide with no spaces or periods to 833-212-2112, and I'll be happy to send you a copy of the definitive guide to self-directed IRAs. This is a great resource. It is totally free. Just text the word IRA guide with no spaces or periods to 833-212-2112. Message and data rates will apply like normal, but we won't charge you anything to send you this great resource. My friends, political risk, which is what we're talking about today, it's a real thing, and it's something most people never consider until it's way too late. You can protect yourself against this by diversifying some of your portfolio away from Wall Street. Do it while you still can.